Cryptocurrencies are getting absolutely smashed. The stock market was in the red as well. I'm going to show you what is so important because it has never happened before. The first thing I want to talk about is the price action related to cryptos. I'll give you all of that. The second thing is the catalyst. What is it that Bitcoin and cryptos haven't seen yet at all? And the third thing is what's happening now and into the future. If you stay until the end, I'm going to show you what you as an individual can do. This affects everybody, not just crypto holders. Everybody must be aware. I've got all of that to cover. Let's begin. Let's start here. Bitcoin swoon deepens as bears begin to test the $40,000 threshold. Looking at this, you could see crypto holders looking at losses of 12% this year. This has really come down quite a bit. Now, for many people who have been holding a long time, they've seen the ups and downs. They have seen the roller coaster that Bitcoin can be. Bitcoin ETF goes from boom to bust after a record US debut. BITO is down 9% this week. Many people jumped in on this, and in fact, it has performed extremely poorly. If you look at this, I found it to be interesting. Documenting Bitcoin said on January 8th, 2021, Bitcoin 40,800. A year later, exactly 40,800. Seems like a pretty stable currency. Now, if you measure it that way, certainly, but the day-to-day movements are anything but stable. We know how this can be, and many people who have been in it a long time, they hold strong. They don't necessarily see this as anything new. You could see what's happening in the fear and greed index as it relates to cryptocurrencies. Extreme fear today. I'm going to quickly cover just a little bit of what's happening in the price action. You could look at this right above my head up here. We are looking at the more recent time frames and essentially right around that $40,000 mark. This is a very big level, okay? We could look at that back in the September time frame around 40,000, finding it as a support region. It was a resistance point around July of 21, and of course a couple times both support and a resistance, okay, over the last while. What we're looking at right now, in fact, if you see what's at the bottom here, this is the RSI, and you might not be able to check it out because my head is in the way, but what we're looking at is a time frame in which we are oversold to the point where we haven't been at this level. If you look down here, May of 21 was the last time we hit this low. And what happened after that? Well, it took a while, let me tell you, to get back up. Doesn't mean we're going to repeat that exactly, but here we are in this time frame, taking, from May all the way up until July to start a new trend upward. So let's keep an eye on this. At the same time, you look at many different indicators showing us that we are oversold at this time. Okay, so let's talk about the next factor. That's what you came here for, okay? What exactly is going to have an impact on cryptocurrencies like we have never seen before in history? And let me just spell it out. Interest rates going higher. Since the introduction of cryptos with Bitcoin, interest rates have been declining. Now today, very different story. If they're going to hike rates 3 times in 2022 and keep the program and the era of low rates is over, we are going to really see how much people believed in their Bitcoin crypto thesis. I would expect that the Fed getting more and more hawkish is very bad for valuations. There is really 2 camps. Bitcoin is not good. Bitcoin is good, and there generally isn't many individuals in the middle. They're kind of just separated on that front. What I believe is that I've seen so many point to Bitcoin is an inflation hedge. Watch what has happened. You saw the price going up as we were clearly seeing inflation going higher. The price of Bitcoin was rising. Now that doesn't seem to be the case. So I pose that question to you. What do you think? Put it in the comments. Is Bitcoin an inflation hedge or is it speculation? This is what we got to talk about. But regardless, we have never seen interest rates going higher or not at zero at all during the introduction of cryptocurrencies throughout this entire period. So this would be the first time. This is a huge hurdle to overcome if it's possible. Expectations for the Fed to begin raising interest rates in March, a fringe call just 2 weeks ago, are soaring in the wake of a slide in the US unemployment rate and fresh signs that the central bank is eager to wind back record policy stimulus to confront historically high inflation. We've seen Jerome Powell. We have seen what they have suggested to us. Now here we are. It's hard to avoid the conclusion that the labor market is very tight. We believe the Fed officials are coming to the same conclusion that it may be tough to hold off on the hike until June. Our prior call, we now see liftoff in March, followed by a quarterly pace of hikes thereafter. I think this is massive, not just for cryptos, but of course for all assets. US inflation rate is probably going to spike again. South Korea, Romania central banks may hike rates again. Price data from China to Brazil may suggest that pressures have peaked. We don't know what's going to happen. And in fact, I think this article and another one has a long list of details of what's going on. But look, US inflation probably hit the fastest in 4 decades, helping explain a shift in the Federal Reserve's approach to monetary policy, as well as a more consumer anxiety about the economy. You see that. Look at all the data that I have shown you about consumer sentiment. People are worried. People are taking on as much debt as possible. That's going higher. And of course, we see this affecting the real economy. There's no doubt about that. Look at what happened with the stimulus, and then you see how it directly affects what's going on. People spend money when they're being handed it. That is an absolute fact, okay? The widely followed consumer price index is forecast to rise 7% for the year through December and climb of 0.4% from a month earlier. Big increases still. We were told that this kind of would level off. Don't worry. But here we are reporting data in 2022. Of course, this comes from the month before, but we are saying, well, you know what? That hasn't happened yet. So we need to realize that even according to their statistics, which we know that are not very accurate, we're talking about things that are way beyond the expectations of even the mainstream. Okay? And they just get on with that. I think I've made my point. Look, risk bubbles are deflating everywhere, some market watchers say. And of course, I have said this numerous occasions, that when you look at cryptocurrencies, let's be honest, there have people who have been in it for years and years. And when that happens, the dips, the ups, the downs, they're not any different. They're not saying, wow, this is fantastic. And they're not saying, okay, this is bad. They're just saying, I'm along for the ride. And that's a matter of fact. Some people, however, perhaps those who have got in late in the game, they might be more worried. They might be the ones that are doing the selling. But at the same time, you've got two different groups of people. You've got the institutional investors with the big money, multi-billions being thrown in. And then you've got the average individual. Maybe they're putting 1,000 here or 10,000 there. And what I believe, and what I've said many times, is that when you look at these, let's say billionaires or billion-dollar investment firms, they have money in Apple stock and they have Bitcoin. What do you think they're going to do with their cash? Okay, they're going to pull it out of the cryptocurrencies first before they sell the Apple, because they got to look at their shareholders, they have to look at their stakeholders, and they have to convince them that it's better to own Bitcoin than it is better to own Apple. You may disagree and agree or whatever, but you have to understand where the big money is. So of course that affects the price. It doesn't change anything with the cryptocurrency itself. If you love the crypto, the price shouldn't matter. Okay, that is an absolute fact. Bubbles in crypto, high growth tech stocks are popping. Do you think so? That's the question I pose to you. I'm simply here to report on what we're seeing and give you the information coming from the institutions, and then you can make those decisions for yourself, okay? For those concerned that the decade-long super easy monetary policy has created asset bubbles around the world, the first signs of trouble may be in the making for inflated markets. They do talk about cryptos, talking about palladium, long-duration tech stocks, and other historically risky areas of the market. But let me go a step further. What's happening right now with NFTs what's happening right now with the metaverse, this term that's being thrown around. But all of these things are adding up, and people are starting to realize maybe this is getting a little bit ahead of itself. Okay, that's what I want to talk about. That's what I want to discuss. So let's look at this here. I have something to show you, and this really relates to what we see now and what we are going to see in the future. Charting the global economy, jobless rate in the US falls below 4%. I will cover this in a separate video because there's so many charts, so much data. This article is out of Bloomberg, and as always, the links will be in the description below. But I just wanted to note one thing for this video here is that when the unemployment rate is at 3.9% in the United States, and you've got the jobs numbers looking fantastic, there's now hiring signs everywhere. You see bubbles that are forming. There's no doubt. I would agree with that. Many bubbles everywhere. What does the central bank do? Well, they can let it go for a long period of time, but they can't let it go forever. Many people would say, no, they will, because they want the bubble to continuously grow forever. If you understand the history of this organization being the Federal Reserve, you will know that that isn't the case. This happens to be, I can't even pronounce it, Hermes, the luxury brand. This company makes something called a Birkin bag. This Birkin bag, right here, actually, it says crypto equivalent 40,000 British pounds. I don't know if that's the real bag. I thought it was more like 25. But anyway, the point here is that they've created a meta Birkin, okay, using that term. See, meta, now it's a term. Literally just a couple months ago, that wasn't being used. Now suddenly it is. You attach the term to it, just like SPAC was a cool term for a while, and it was getting a lot of money being thrown at it. A VR version of its signature bag. And suddenly people are buying it like crazy. And the hope here is that they're going to buy it and then it's going to be resold. That's really what it's all about. This one here, Nike, has a digital sneaker company, which is ridiculous. That's my opinion. They made 600 pairs of these shoes, generating $3 million, all without having to manufacture a single pair. All right. Let's just talk about what you can do. See, all this information, okay, what can you do? You stayed until the end, and so you get this information, okay? Don't overexpose yourself to one asset class. Just because there's a bubble going on, just because things are getting crazy, doesn't mean that you have to take all your money out and throw it under your mattress. You got to do what you think is right with it. But the point is, you don't want all your money on one thing because, number one, the lack of diversification gets you exposed to swings up and down. At the same time, you may be left without, let's say, cash flow when you need it, or if that price of that particular asset starts to fall right when you need that money, you're going to be in big trouble, okay? Second thing is hedge against inflation by buying real assets. If you see inflation as an individual, as the household, what do? You can hedge against it. Holding real assets is the way to do that. And the third thing, buy at today's prices to lock it in. If you're worried about the food price rising, of course you can grow a garden, but simply buying today for storable food, things that go for a long period of time, you lock in the price, okay? I hope that's a good message for you. I'm going to just say, if you support me, if you want more of this information, hit that thumbs up button, okay? Like that video, it's right down there. That's all you have to do to support the channel, okay? I appreciate that very much. If you haven't seen this video yet, check it out. It's right here, and I'll see you there.